Welcome to the Nick Halaris Show. This is the place where we explore big ideas with people having a big impact on our world. I'm your host, Nick Halaris, serial entrepreneur, author, early morning riser, and seeker of truth and wisdom. Join me as we explore the journeys and discoveries of fascinating people who are literally unlocking the secrets to creating a life of both success and fulfillment. Each episode will arm you with insights, ideas, and practical perspectives on what it takes not only to be financially and personally successful, but also how to start having authentic impact on the world around you. Hi, everyone, and welcome back to the Nick Halaris Show. Our guest this week is Pavel Sokolovsky, an entrepreneur, investor, and the writer of the popular newsletter PS You Should Know. Pavel, welcome to the show.
Hey, Nick. Great to be here. Thanks for having me on.
Yeah, man, I've been excited to have this conversation. You know, I've known each other for several years now and had a bunch of interesting sort of conversations that haven't been recorded. And so I figured it was time to actually hit the record button and see what we can do. So thanks for being here.
Yeah, right on.
So I figure an interesting place to start this. You've had such a sort of diverse journey in life, trajectory, a different kind of trajectory in life than most people. Kind of going all the way back to the beginning. And you grew up in the Soviet Union until, if I got my facts right, until 1989 or something like that. So I wanted to start there. What was that like, and how did you end up in the United States?
Yeah, that's exactly right. It's interesting to hear it referred to as sort of a different journey because I'll be totally blunt. So many people who I grew up around kind of shared that same path. My community, including my close family, my cousins, and so many others who were family friends from the Soviet Union, all kind of stuck together in the United States, and so it was super normal in my history of it. My remembering of it. But yeah, so we emigrated from the former Soviet Union in 1989. And that was sort of the first, well, wasn't exactly the first, but it was kind of like when they let us leave, there was this great migration of folks who kind of just left all over the place. And the United States was, a great place because it was accepting refugees from the former Soviet Union at that time. Another place that folks ended up is Israel, to Canada. And so we moved. I was very young. I was, under 5 years old. We moved and settled in Chicago in the suburbs and kind of figured out how to adapt to this new country, new life. And again, for me, it was really easy because I was so young. My parents, my older brother, much more of a lift and much more of a change. But yeah, it was definitely a really awesome thing that happened for us. I'm really grateful to this day for them taking that leap and getting us out of there and getting us to, be able to live in America, which is a country that, I've called home ever since. And I'm really grateful for that.
Yeah, man. When you were, did you like speak Russian? Do you have like a lot of memories from that time? Like how much of that period, it sounds like there wasn't that much of your life that you spent there, but how much do you retain these days?
So of my life in the former Soviet Union, very little, to be honest, but we grew up in basically a household where culturally, it was still that same place. And so, yes, Russian was the language we spoke at home. Russian was the common language amongst so many of our family friends, so many of our folks who we spent time with, everywhere from my grandparents who came with us. My grandmother learned a little bit of English, but she still predominantly speaks Russian. Same with my grandfather. And so, yeah, that was still very much the culture we ate. The food that we grew up eating, like we slowly over time adapted to American diets where, I think when I was later in my childhood, I would insist on my parents taking me out for fast food all the time. And Burger King was probably one of my favorites. Little did we know back then, that probably wasn't the best diet either and wasn't so advantageous for long-term health. But yeah, culturally, like very much, it wasn't like Russian per se. It was this flavor of Russian. It was Russian Jewish culture. Whereas a little bit of a difference from the traditional Russian culture, because, there's been this ethnically Jewish thread throughout our family for many generations, even, though in the Soviet Union wasn't really much of a practice of any religion. And so the actual practice of it was gone, but the culture of it remained very strong. And so that still, became a mainstay of our household.
Yeah. Fascinating. I don't know if you listened to all the episodes. There's been a lot of them, but we had somebody on the show, a gentleman named Simon Mikhailovich, who I think he left the Soviet Union at the exact same time. It was like, it may have been in the same year, 1989. He was much older. And so his experience of it was informed more by what it feels like to be like a 20-year-old or something and leave the country and come to the US. But he had interesting things to say about it. And he also shared sort of that same perspective that you shared so nicely about how it was like positive and how coming to this country really changed things for your family in a positive way. And I feel like a lot of Americans, that we're basically spoiled and we don't understand what it could be like to live in a place like the Soviet Union. So I'm always fascinated by stories like that. My dad was an immigrant himself, but he came from Greece, which, maybe it had less opportunities. It wasn't like the Soviet Union though, where there was like a totalitarian regime in place. It's just a different animal.
I've often thought of, when we left, I think my parents both must have been in their late 20s, maybe early 30s, two young kids. And they're moving to a country where they don't speak the language, and they know a couple of people, a few people, didn't have any money to bring with them. Like, it was daunting. And I think to myself, what could I do if I was put in that position, and what's an analogy to that position today? It's like, if, we have young kids, and if all of a sudden my immediate family felt like we had to leave and we had to go to like India or China or just like a totally different environment and somehow set up our family and figure it out. It's an immensely brave thing for them to have done, and grateful that they did it.
Yeah. Yeah. It's staggering to think about it. I've got kids roughly the same age as yours, and that will be very stressful. But I guess if there are circumstances in life that you'd be willing to take that risk, what may. What kind of jobs did your parents land when they got here?
My father had a master's degree in mechanical engineering. He was, as you might imagine, like kind of, at the good time in his career in terms of gaining authority, gaining experience. When he came here, there was an organization called HIAS that helped us get set up with another local family in the Chicago suburbs, kind of like supported our transition in a way of like inviting us to their house for Jewish holidays and, just trying to generally be helpful. And I remember that that family had a family friend who owned a nursing home. And I remember my father got the first job, which was basically like maintenance, cleaning toilets and fixing plumbing leaks in this nursing home for minimum wage. And he was grateful to have had it. And, again, these memories, I was a young kid. I didn't really get the exposure to it. But, having heard the stories over time growing up, I think it's remarkable. Right. And he went on to build his own business and kind of, get into his own in the US. But it was a huge change, right, from highly educated, running big projects with large teams to starting at the very bottom of the employment totem pole with a minimum wage job doing manual labor. My mother, similarly, some job doing clerical work, I think at a law firm, which she was able to continue to learn and grow and develop from there.
Yeah. Yeah. My dad was a short order cook at a restaurant, a Greek restaurant, and then worked at like the Red Cross, all for minimum wage. I think that's one of the things that for me, the narrative around immigration, like right now, like immigration is a hot button topic because supposedly the hordes of people are attacking the US border, every second. But the narrative has gotten so twisted around jobs and work and whatnot, because I think the truth is that people who come here want to be here and they want to work and they're willing to take risks that maybe some Americans aren't willing. And so this narrative around, they're going to take your jobs is kind of ridiculous, but that's maybe a subject for another day.
I mean, it's such a hot button issue. And to me, it's strange that it is, because it seems so obvious that we want more people. Like, growth is the fundamental requirement for the economic system that we have. And so if we don't have population growth organically and we limit population growth by immigration, what we're going to end up with is a scenario where we're missing the fundamental input. And now we've got to rely on other levers. We might not always have those. And so the easy one is there's people who want to come here. They're willing to work hard to come here, and they're willing to start over when they come here. But I think it would be advantageous if we were to have them join us.
Yeah, it's a no-brainer. It's true. I don't think people really appreciate the extent to which our system is based upon this like simple GDP growth formula, which is like GDP growth is population plus productivity. And the problem that many countries, almost every other country on planet Earth, big country, is struggling with the population side of that equation. And some of them, the forecast looks terrible. Like Russia actually is a good example of a country who's like dying, literally. Like their population is dying out, and China is on their way. And unless we're going to change the way we measure the success of our economy, like, you need people. There's no question about it. It's interesting to see this playing out in the U.S. and the politicians not really like understanding that basic formula.
Here's a more complex example here for you. So if you think about my family's immigration story, so when we came, it was, a group of us that was my immediate family. So my brother and I, our parents, our cousins who are both around my age, and their parents who are the siblings with ours, also our grandparents, the shared grandparents amongst us. And so it was, you're taking the whole family, right? It's not like you can pick and choose, who you want. Like, it's either the whole family or the whole family is going somewhere else. And if you were to start picking apart, and I had this debate once with someone from a different part of the country, different kind of upbringing, different values, and they were pretty anti-immigration, and they were pretty anti-immigration and from an economic lens, which I thought was misguided. And so I painted the picture of my grandmother. So my grandmother, like I said, she learned a little bit of English, but not substantially. And she had some jobs in the U.S., but mostly, like, she was already older when we arrived here, and eventually to go off Social Security. And my grandfather worked, but my grandmother stayed at home. She helped when we were young take care of myself, my cousins, so like helping with childcare. But like if you were to just draw a box around her contribution economically to the United States, probably financially negative if you were not to like value all the other things. And yet, what a deal it was to subsidize my grandmother and also get the rest of the family, because the amount of economic contribution that the rest of us have brought to the United States is tremendous. And so I think about how many times can we make that trade? We should make that trade as many times as possible. Like, we should bring whole families over, and we should really incentivize them to work hard, which I think America does very well, creating these incentive structures. But a lot of folks look at it and say, well, no, we don't want the person who's not going to bring direct economic value. And I think to myself, well, we're throwing out the baby with the bathwater if we make that argument.
Yeah, it's a great point. Well, thank you for sharing that. It's a unique part of your history, and I think it probably informs some of the things we're going to talk about later. So I wanted to just get it out there and talk about it now. Let's fast forward a bit, because if I remember your story right, your father or your parents, or maybe it was just your father, somebody in your immediate family started a business eventually, after taking these minimum wage jobs that you ended up working at, and that experience led you to your first startup. So tell us about that.
Yeah. So that was my father, who had started a HVAC contracting company in the Chicagoland area in the mid-90s. He started it with a couple of co-founders, a couple of partners, and I think they had all prior experience working together at another contracting company. And so this is, I learned over time, this is kind of a trend. This is how a lot of contractors get started. They're technicians, and they think to myself, hey, I know my craft really well. I know how much they bill me out for as an hourly rate, and I know how much they pay me, and I see that spread, and I can go into business for myself and capture that. And so, they took that journey, they took that plunge. One of the partners pretty promptly kind of peeled back. He's like, you know what, never mind, this isn't for me. The other one, they continued to build the small contracting business day in and day out for several years. And then in the early 2000s, my older brother joined the business, and they all kind of continued together, and they moved away from what I'd say the roots of the business were, which is, single family service installation, one job at a time, to more construction, multi-unit residential, light commercial construction. And so throughout the 2000s, that was kind of the mainstay of the revenue for that company. And then eventually the other partner decided, he'd better go off on his own. And so they amicably separated ways. And so it was my father and my brother running this family business. And I was graduating from the University of Illinois in December 2007. And I was really bad at wanting to interview to get a job. And this seemed like an obvious thing for me to do to, support the family by helping participate and take up the family business. And so it's a little bit of all these things led to me joining that company, which was at that time, a couple $1 million in revenue, small contracting business, predominantly doing new construction, multi-unit residential, light commercial, HVAC jobs. And then 2008 was basically my first full year. And that was when the beginning of the end really started to take hold in the construction market. Banks basically started slowing down funding on all the construction projects. General contractors started putting the squeeze on everything. And it became kind of a mess. And because my degree was in finance and nepotism has its ways, I was the head of finance. And what that really meant at the time was I have to go collect all the money that all these contractors need to pay us that they didn't have, that the banks weren't lending. And this was just, it was a tough environment for, I think, everyone. I was 21, maybe 22 years old, probably looked like I was 16 years old. And I would go in and file liens on these developers' properties and then sit down across the table with them. And they would be really mad at me because that was bad for them in so many ways. And it was, again, tough for everyone. But out of that, I'd say really fortunately, I found myself in the HVAC industry and with a co-founder started this business selling HVAC equipment direct to consumer online in early 2010. That was a company that became ecomfort.com, which was, really fortunate in that, we were able to find a space in the market where there was demand for the products we had to sell. We did a really good job of building a lot of the fundamental business infrastructure to be able to grow organically and to make something that was worthwhile.
And how long did you have eComfort? Did you end up selling it? Is that what happened to that biz?
Yeah. So in 2015, sold that business to Ferguson, who's a large publicly traded wholesale distributor. They at the time had the largest plumbing, kitchen, and bath business in the United States, and I think the second or third largest HVAC distribution business in the United States. And for them, they were actually, I'd say, ahead of the curve in understanding the impact of the internet on a lot of these categories in the building trades. And they saw an opportunity to kind of take up some space in the HVAC category online. And they, for several reasons, it was advantageous for them to acquire rather than to build it from scratch. And so really fortunate that it worked out. We fit nicely with them and they became the new home of eComfort and still are today.
Nice. And in that 5-year period, like how big had you grown eComfort? So you said it started in 2010 with 2 people, and what by the time you sold it, what did the company look like?
It was sub 20 million in revenue, about 25 employees. So still very small by this big business standards, but we started it with, let's see if we can survive on an income from this business. And so it was a resounding success for us.
Yeah, for sure. And did you raise any outside money or did you just self-fund it?
No, we never raised any money and we were perpetually undercapitalized, which is one of the biggest lessons that I learned from that experience, which is we ended up having to be really crafty and clever, solving a lot of problems that, on balance, it would have been just better to not have to solve them because we could just pay and they would go away and disappear. And so once the business was under new ownership, they had a much stronger balance sheet and were able to leverage that balance sheet. Not only did the business become significantly more profitable, it also began growing a lot faster and became easier to operate.
Yeah, that's interesting. So like, if you were to do it all over again, you would have just tried to raise some venture funds for it?
I would have tried to capitalize the business. I don't know that venture capital was the right fit for it. And I have a little divergent story, which is once we realized that the business is under capital, we're experiencing great growth, everything's going well, but like, there's just, there's this stress on the balance sheet all the time, especially actually seasonally, every year it would come around. And so I went out and started fundraising, and the only world that I knew of fundraising was venture capital. It was an area of interest for me since college. I would, follow Fred Wilson as a blogger, and I'd learned about VC from all these other folks on the internet. And so I decided, hey, I need to go and raise venture capital, and kind of figured out how to position the business as a story that the VC investors might, digest and like. At that time, it was actually a trough. I think this was probably 2014. It was a trough in the interest of venture investing in e-commerce. They were not particularly hot on that topic. And then also trying to explain the HVAC industry and why anyone, would be willing to buy air conditioners on the internet was a challenge. And over time, I realized that, it's probably not the right fit for the venture capital model. Looking back on it, I could say that, but it definitely painted a picture of there is a gap in the funding environment for businesses that could do well with a little bit of capital that are not the right fit for venture capital and also not far enough along or not, cash flowing enough for private equity to really be like the right place for funding. And so I think that's an interesting takeaway that I had from that experience is there's this market gap in capital access for a lot of these businesses that could do a lot better, that could solve more important problems if they weren't so busy running around figuring out how to get a discount on my QuickBooks.
Right. That's right. Yeah, I feel like it's a huge gap actually. Like I've had some experience with some small businesses as well, kind of in the real estate services. So not too far away from, selling HVAC stuff. And there is this like gigantic vacuum. Like I imagine in early capitalist America, even in the 20th century, there was a place you could go, like the bank, and get a loan for a small business. And nowadays, the way these banks are presenting themselves, I don't really know if that's possible. Like I had one small service company that was maybe just like literally like $2 or $3 million a year in revenue. And we had to have like 5 or 6 years of profitable history before a bank was willing to give us like a basic line of credit, like the most basic thing you could possibly need to operate a business like that. So I agree with your statement or your hypothesis that there's like this whole. Hey guys, this is Nick. I wanted to take a quick break from the episode to share some exciting news. In addition to the podcast, I want to make you aware of some additional content we're putting out. And best of all, it's 100% free. Our Profit Plus newsletter consists of weekly insights about what it takes to find meaning in the pursuit of modern success. This is the place where we explore big ideas at the intersection of markets, business, politics, and life as we seek to empower our readers to have an authentic impact on the world. If you're serious about finding fulfillment amid success, then definitely check out these additional insights. Just go to subscribe.nickhalaris.com. Again, that's subscribe.nickhalaris.com. Now let's get back to the episode. I've seen some people trying actually that business we sold to these young guys that have a thesis that because there's such a huge hole that they can buy companies at better valuations than the big private equity companies. And so people are coming into that space, but I think it's wide open still. What do you think?
I do think that it's evolved favorably. There is more access to alternative types of capital, but I totally agree with the last part where it's still very early days of that. I think one of the problems I've sensed, especially over the last 5-ish years, because the attention tends to go to the venture capital style companies, just like I tried to mold our image to look like a VC track company, there's a lot of founders now who rightfully in a lot of ways believe hey, that's what I should do. And I think that was a moment in time, and hopefully more of them now realize that's not necessarily the optimal strategy for most businesses. What I'm getting to is I think the venture capital strategy has a totally unique playing field when it comes to business valuations and when it comes to business value. And the valuations early stage are divorced from value. And they only happen that way because of the model of venture capital financing and the very large outcomes that pay for that model. And so for businesses that aren't in a position where they're going to deliver those outcomes, or especially for founders who are not trying to deliver those outcomes, who much rather just deliver, a good profitable business that, cash flows a lot for them and their families, I think they have this skewed perspective of valuations and value for companies that don't fit the venture capital model. And so I think there's just two different worlds, and it's been so murky that it's not been clear to folks what world they live in. And I think that's net a disadvantage.
Yeah, that's a good point. I've seen it a lot in my industry where real estate startups that are kind of charting out their future, they make the mistake of pitching themselves as a venture company when they're really a real estate company. And they do it because if you can raise the venture money, it's like so much better than the real estate money, because the real estate investors are savvy and they're like, okay, they're not going to give you money on some dream. Like the actual underlying thing they're putting their money in has to produce a return or have the reasonable expectation of producing a return, where venture just operates in a different world. And I've seen some people kind of get in trouble where they raise these venture on a plan that has no chance of scaling. And then you've got a bunch of disappointed investors because, yeah, it might be great because it's like completely discretionary capital. You can do whatever you want with it. It's not tied to a project like real estate, but you can't scale real estate in the same way that you can software as a service. It just doesn't. It's two different businesses.
Yeah. Well, and even some of the software as a service businesses, you can grow them. I think the word scale gets used a lot. You can grow them and you can grow them to be sizable, but when I think of the original application of the word scale, when it came to the start, like, it's not about, achieving growth or even compounding for a while. It's about like hyper growth and, orders of magnitude increases in a very short period of time, because that's what internet economics enables. That's what internet networks enable. But if you're selling, some sort of software to a known fixed, not necessarily fixed, but like a known size mid-market, solving a point solution for them, you can grow it and you can grow it to be profitable, but it's unlikely that it's going to be, $1 billion revenue for most of these businesses. And so I think there's just this math that ends up being relevant, but gets ignored, and it's easy to ignore when venture money is raining from the skies like it was, 2021, 2022. And I think that like I said, I think we're over that period of time. And what I hope is there's more obvious sources of good capital available to businesses that don't have venture scale ambitions, but also have really great opportunities in their markets to actually like just build solid cash flowing businesses that use all the same techniques that the VC funded companies have grown to apply in terms of growth, in terms of product management, but not necessarily have this, wild, we have to be $1 billion business or burn it to the ground in the next 4 years mentality.
Yeah, that's so fascinating. I've been thinking about this theory. I want to get your take on it. So I feel like this obsession with venture in America, especially for young people, like basically people who graduated school from like the time that you and I did till now, this has been like the dominant mythology. Like, how do you get rich as fast as possible? Essentially, well, you go into this space either as an entrepreneur or investor, angel investor, whatever. But I feel like what we're seeing like now with the SBF trial and other, frauds and blowups and stuff is that there's been a moral consequence for this kind of thought. And my hypothesis is that it's based on this idea of, just grow at all costs and deal with it later, which really emerged like right when you and I started to become entrepreneurs, like 2010, like remember that early cohort of companies like Uber and all them and WeWork, they're just losing money hand over fist, but it didn't matter. As long as you grow, one day you'll make up for the sins of your youth. But fast forward, some of these companies are never going to be profitable. And, I feel like what we saw with crypto was the extreme version of that, which is like, as long as we win, it doesn't matter what we do along the way. And there's a problem with that as we're seeing now. But what do you think about that connection?
Who was the philosopher who said, if the ends are just, the means are just?
I don't remember, but yes. Yeah.
Or like the inverse of it is like the means must be just for the end to be just. It's interesting. So yes, I think that's the environment that we've lived in. And, you could forgive anyone who's adopted that mindset because that's the environment that that's the reward system that we've kind of been accustomed to and created. Now, I think on the plus side, that reward system has created a lot of ambitious people. And out of a lot of ambitious people, two things tend to come. One is failure for many of them, maybe most of them, but sometimes really impactful success for some of them. And so, you might argue that maybe Elon Musk is also a child of that environment and that like level of ambition. He had his first startup, I think before that time, I think it was Zip2 or something like that. And he kind of kept rolling it in, and he would go for bigger and bigger, but he's very much the exception, right? For a lot of folks, go big became so important that they were able to and willing to, SBF example, like they were willing to do anything to get there. And they figured it'll be fine as long as as long as we can pay it all back in the end, which I think is sad.
It is sad, but it's sort of the logical extreme version of the ethos, which is like grow at all costs. It doesn't matter. And there's a tremendous value. I feel like the venture capital funding model is actually one of America's like greatest inventions because it does allow you to divorce yourself from rationality for a second and believe. And that sort of mental jump has produced some of the greatest companies and products and whatnot that we've ever seen in human history. And so there's a value to it, but there's also a consequence, which is that, yeah, it's also incredibly winner take all. that dream is not a shared dream in reality. Like you might want to participate in it, but for every Elon Musk, there's like millions of non-Elon Musks. And I don't know what that does to a society over the long run, but it probably has a negative consequence. It's interesting nonetheless.
I think, that culture of risk taking, I think it's on net positive. I mean, America created a really good environment for risk taking. And one of the things that people don't really talk about, it hasn't been popular for a little while. One of the things that promotes risk taking is our bankruptcy code, which allows people to take on risk. And if it all completely fails, like there is a reset option available to them. It's not fun. It's not a great option, but it is an option, right? Because in prior times, in prior periods, there was debtor's prison, or if you owed money and you couldn't pay it back, you're going to jail. And so I think recognizing that risk taking is good, even if it comes with failure for some, that's okay. And the safety net that America has created is, a graceful way to kind of unwind a lot of these things that didn't go well. Remember, I started my career in, basically 2008 in the real estate industry, in the construction space. I saw a lot of folks go through bankruptcy, and not like business bankruptcy, but personal bankruptcy, in addition to business bankruptcy, all at the same time. And so it was very tangible and real as a thing for me to have witnessed. And what I also saw was it allowed them to start over and just keep going and keep building. And they were actually, I think, stronger the second time around, and were able to go and take another shot at it. And I think that was one of the most beautiful parts of America is, hey, you know what? We reward risk so much that we want to create a plan for you to take more of it, even if it didn't work out the first time.
Yeah, it's such a great point. It's funny you bring that up because literally, this goes back to the early 2000s, and somehow I ended up in getting a summer associate job at a bankruptcy law firm. And I just so happened to have a history, like a legal history class where like you had to write a paper and you could turn it in whenever you wanted to. It was like one of the coolest classes at Stanford where it's like, whatever, you want to come to class, just turn your paper in before you graduate. So I ended up working at this bankruptcy firm. So I wrote a paper about the evolution of bankruptcy law in America and the tie to morality. I'm going to have to dust it off because it's 20 years in the making, but I do remember that point, which that it was a big fight. It was a big cultural fight about how we should treat failure and capitalism in a world where, essentially we had this Judeo-Christian moral framework where things like debt were like taken pretty seriously. And it took America like a bunch of iterations to finally get to the place where we are today, where we're okay with people failing as long as they don't, cheat and become criminals, which is unique in history and unique even around the world. I think this is the best place to be a failure. That's for sure.
Yeah. Well, I also had some firsthand learning at that time. One of the things that took down folks financially, in addition to the business suffered, but the personally were tied to it, it was the personal guarantee. And the personal guarantee in the small business world is everywhere, right? Like everything that everyone does basically starts by default with, and here's the personal guarantee portion of it. You want a vendor line of credit from your supplier, they're asking for a personal guarantee. You want a bank loan, there's a personal guarantee. And I think this was just the default. And what I remember seeing at the time, like the really big companies, the bigger the project, actually that's when they had less personal guarantees on the line. And I was like, how is that? What's going on? And it's also one of the times when I realized that turns out that personal guarantee is negotiable. And I had seen so much carnage, and I wanted to make sure to protect myself when we were building that business. So our position was we don't sign personal guarantees. So we're like, you should sell to us and extend us credit because you believe in our business. And if you don't believe in our business, then you shouldn't do it. And for almost every supplier, they took that and ran with it. And it was a good outcome for them. But one of the things that I took away from this is, that personal guarantee actually is negotiable. And if you position it correctly, the supplier should be happy to take risk on you. The creditor should be happy to take risk on you. And that creates a more stringent environment for underwriting and for, understanding business. I think it's great. So I think there's a lot of complexity in, how this all kind of fits together. But I do think one of the things that I found interesting was once you get big enough, that actually goes away as a criteria by default.
Yeah, which is it seems counterintuitive, but the exact same thing is true in real estate. Like my business partner at Metros Capital, prior to teaming up with me, he had a very big home building company, and they had these massive lines of credit with like Wells and B of A, like $400 or $500 million, no personal guarantee. And John and I go to get like a loan from a local bank to buy a $5 million property that has cash flow, like an existing apartment, and we have to sign personal guarantees. Like the world is a little bit backwards on that. And I guess the negotiability of it in my world is completely dependent upon the business cycle. Like right now, there's no chance. Like you can barely get a loan right now, but going into like 2022, you could get a loan, you could negotiate away the personal guarantee. But times are definitely changing on that front in real estate.
Yeah. Well, one of the other things that I'd say is I've now seen the other side of it where, there's some projects where there's just so much confidence that I don't care. Sure, I'll sign one. It's fine.
That's how we feel about the real estate. It's like, look, a lot of things would have to go wrong before that personal guarantee hits. We don't take it lightly because if you sign so many, you could wipe yourself out. And there are plenty of examples of people who did, but interesting stuff. Okay. So 2010 to 2015, you build this company, you sell it to Ferguson, which by the way, I do business with Ferguson regularly. Great company. Then you start doing different things, right? You start investing, you start writing your newsletter. So what happened next?
Yeah. So it was an interesting time. So the first year was actually a lot of work integrating the business, which effectively meant rebuilding it in a sense inside of this new organization from a tech standpoint, from a supply chain standpoint, and eventually from a people standpoint, because we moved our offices about 50 miles, which back before remote work was the standard for so many businesses, that was a big deal. And it meant we did have to transition a lot of the team by their choice, obviously. And a year into it, the business had been proven to be on the right trajectory. Sort of the path that was laid out from the earnout milestones looked like it was really high confidence that we get all the way there. And I realized that one of the things that I really loved and enjoyed personally was being around entrepreneurial people and sort of the world of, you can call it startups, you can call it small businesses, you can call it any of those things, but folks who had this desire to just go out and build stuff and go out and do things that are maybe a little bit different or do things that were proprietarily theirs. And, I feel like those folks are my tribe in a sense. And so one of the ways that I decided I would be able to stay engaged with that community and to give value back to that community was through angel investing. And so I think it was 2016 or maybe very early 2017, I made my first angel investment and sort of started being more active in that space. And I would, get occasional phone calls or emails from folks in my network who wanted to pick my brain on experience that I had in some form or fashion. And I would be very willing to share and to chat and to do all that. And, one thing led to another. And eventually I kind of figured out, how do I continue to nurture this community and to nurture my participation in it? And so all good things kind of happened to me organically, one of which was I was approached with an opportunity to teach a class at the Kellogg School of Business to their MBA program on new business development as part of a series of courses, which was an amazing opportunity. I also started writing this newsletter in, I think, early 2017, which we can talk more about. But this was an opportunity for me to kind of stay in touch with my tribe and with people who had same shared interests as me, and to kind of share the things that I was learning and seeing out there as I spent time absorbing knowledge and synthesizing it. And then one thing led to another with angel investing. And I found myself with another person basically co-leading an angel syndicate. It's called Nameless Ventures. And so we've been doing all these things kind of ever since the pandemic. I'm no longer teaching, but the rest of the stuff continues in the ethos of trying to be around entrepreneurial people and support them and give back, and also ride their coattails to some extent as an angel investor or as a participant in what the value that they're creating. All those things have remained a common thread for me.
Nice. And on the investing front, how did you choose angel? Like, there's so many places to enter. Angel is obviously like the most risky, I guess. But what got you interested in that phase? Is it just because of your own life journey and where you thought you could add most value? Like, what was the story?
Yeah, good question. Well, so public markets to me have always been, and kind of today remain, just not my thing. not exciting. I've got a really bad track record of speculative investments in the public markets. So if you ever hear a stock tip from me in publicly traded, probably just don't take it.
Okay, good.
But just generally, I studied finance at my undergrad program, and generally the efficient market theory was beat into my head. And I thought that, the indexing approach was pretty good. Generally like mutual funds and diversification was pretty good. And that stuff to me was just very boring because it was far removed from the operations of a business and building a business. And to me, there are so many intermediaries between the people who are making the decisions about how to continue, doing what they do, building what they build inside of the business, were layers and layers removed from me as a small investor in public markets. And I found that with startups, I was actually just much closer to and could relate much better to the folks who are the operators, who are the boots on the ground. And again, they were the entrepreneurial ones. They were my people. And so I didn't take a survey of the landscape and think, where should I invest? Should I invest in lower middle market private equity or real estate or this or that? It was just obvious to me that, these are the folks who, number one, were out there fundraising and looking for, folks like me to write them small checks. And also number two, who I could actually, from my experience, sometimes help. Not always, but sometimes I could help them. I could make introductions for them. I can share some experiences that I have with them or some tidbits that I picked up along the way. And so it just kind of fit to me as an obvious thing to do. And it was also, again, I'd always been following the venture world out of interest. And so this was a way to stay close to that.
Yeah, for sure. And maybe just thinking about your history, maybe the fact that you sort of bootstrapped your company gives you actually a rather unique perspective for somebody to be an advisor for someone running a startup, because you dealt with so many operational challenges in a cash shortage situation. So that gave you some old school kind of okay, here's how you survive mentality, which is super useful for a startup.
Well, even before that, in 2008, I managed a cash budget in Excel down to the penny because I was adamant that we were never going to bounce a check, which happened regularly to all sorts of folks, which I was always surprised by. I'm like, but why would you write a check that is going to bounce? But it was just a common thing that would happen in the world. And I was adamant, if I'm in charge of the bank account and the checkbook, that we're not going to do that. And so it got down to really, tiny amounts of money being, what's happening this week, what's not happening this week, and how do I collect enough of our AR to be able to fund our operations and make sure we can make payroll. That was a real thing for our small business. And then, luckily in the e-commerce business, it was a little bit easier most of the time, but still managing cash flow was critically important. I think the other thing that folks have found that folks can, continue to approach me for my experience with is with that business, we kind of actually had to touch so many different aspects. So it wasn't a dropship e-commerce business. It wasn't just sitting on your laptop in your living room and be able to we actually had warehousing, we had sales, phone sales, we had customer service folks on the phone. We had to actually build our own website. This was before Shopify, when everything just kind of works right out of the box. We had servers that we had to manage, all the different aspects from insurance and finance and HR and operations and shipping things and packing things and warehousing things and selling things and hiring. We had to touch all of these at really kind of a subscale, small scale, which meant that I intimately kind of saw what they all were, kind of figured out what does great look like in each one of these categories, how far away are we from it, and how do we make progress toward getting there. And so I think, have a basis for assessing some of this when I saw other businesses. And, folks, what I've always been clear about with entrepreneurs who I meet is you don't have to BS me about it. It's okay. I've seen it all. I understand, we all, none of these businesses, I think, look as clean from the inside as we might project from the outside. And it's totally normal and totally okay. We just got to figure out which fires to put out and which fires to let burn.
Yeah. And I think, unless you're in that world, I don't think people realize how unique of a perspective that is. Because the venture world that I'm used to is you get a 10-page pitch deck, and at the end of it is the ask, and they're raising on a $10 million valuation, and they've shared with you none of the details, which someone who has your experience knows is behind that. Behind that 10 pretty pages is an absolute operational nightmare or whatever's going on at the company. So I'm sure that's given you a leg up.
I feel like there's always like fun stories. And as you talk to folks who run businesses, especially at the earlier stages, you get to like understand these stories. It's like, how did this person come to work for you? Oh, well, he's this other person's cousin. And, he just started helping us one day and we said, he's great. He's got to join our team. It's like, or like, how did this person come to work for you? And like, there's always like some interesting story. It's very rarely like, well, our HR department put out a requisition. And then we had this, very standard interview process. And then with like, oftentimes at the earliest stages, it's who's around who can help. And that kind of becomes part of the culture of an organization. And I think learning that stuff gives me an appreciation for so many of these companies because it's hard to do it at the early days. And I think one of the things that I saw with friends who out of college joined large established organizations and they work exclusively with very well-paid professionals, they never saw the other side of what it takes to keep some of these things running. And I think having that appreciation for the full spectrum of different contributions to businesses has been really powerful for me.
Let's take a quick break to hear from our sponsor. This episode of the Nick Halaris Show is brought to you by Metros Capital. If you're an investor looking for direct access to real estate investments, then we'd love to talk with you. Investment opportunities at Metros Capital balance financial returns and community impact. To learn more, contact us at metros.nickhalaris.com. Again, that's metros.nickhalaris.com. Now let's get back to the episode. What kind of companies are you investing in the angel side?
So when I first got started, my idea was I'm going to keep a very tight focus on companies that I can add a lot of value to and be really involved with. And that very quickly changed to I'm going to do whatever feels right at the moment. And I have an investment committee of one, which is my wife, who through her good graces, we're able to take our family capital and risk it on these cash burning startups. When I look back at the portfolio that we've assembled, which I think it's been really, really great. The common thread that I think I can paint a picture with is all of them are building a world that I want to live in. And that could be something very small where like, hey, for example, Factor 75, rebranded to Factor later, was our first investment. And they were making fresh, never frozen, but refrigerated meals delivered weekly. And those meals had high quality ingredients. They were recipes that were generally aligned with healthier diets and healthier lifestyles, whether that be paleo or keto or other things that folks considered healthy at the time. For me, that was in, I think, 2016. I was working in Bolingbrook, Illinois, which is a suburb about 30 miles southwest of Chicago. And in Bolingbrook, Illinois, every fast food restaurant that you might want to eat at is there. Delicious, amazing. And I was in my early 20s. It would have been a dietary heaven for me. But at that point, I was about 30 years old, and I had realized that for me, that diet wasn't effective at delivering on my health goals. And I was like, how do I just eat healthy lunches? How do I do this? It's so hard. And when I met this company, I was really excited because they solved this problem. And it wasn't easy to solve this problem. Like I could try to pack lunches at home, but I'm honestly, I just wasn't going to do it. And so how do I eat healthy in the office when the office is in a place where there's just not that as an option, right? Like Sweetgreen didn't exist at the time. There wasn't one of those around. And so for me, they were building this world that I wanted to live in. We're like, hey, I should have this option. And they've gone on to be incredibly successful as an organization, eventually acquired by HelloFresh. And now I think are the largest meal delivery company in the country. And when I look back at them and look back at a lot of the other investments that we've made, it's things that are like, well, yeah, obviously the world would be better in Pavel's opinion if this was the norm, if this thing existed. And so a lot of this is stuff that should be tech enabled. A lot of this is stuff that should have middlemen cut out. A lot of this is stuff that would be just super cool if this was the future, if this worked out. And so that's the common thread amongst them. There's no common thread around business model or strategy or stage or a lot of other things. But the common thread is what they're doing, the ethos of what they're doing is getting the world closer to the one that I want to be in.
Yeah, man, I love that. I never knew that was your sort of philosophy. I knew that you and I were like kindred spirits just from the conversations we had, but I've been writing recently in the newsletter specifically about this point that there's a sense in which business can and should be a force for good. And it's really just a function of intentionality because almost any business can be a force for good if it has the right intention behind it. And I love that has been sort of the evolution. It sounds like it's the organic evolution of your thinking. Like you didn't start out in 2016 and say, hey, I want to have this guiding principle, but that's what happened, just being you and getting in the world and trying to make investments and help entrepreneurs. It's fascinating.
Yeah. And I think what clarified it for me was an investment opportunity that I actually looked at and I said, this is probably going to make money and it's probably going to do well, but I honestly just don't care. Like it was something in the travel space. It was, I think it was something in the travel space in terms of, it was an app that I think was getting a lot of engagement, a lot of consumer traction, and was about to turn on monetization. And monetization in the travel space is sort of like, it's there and there's a lot of money to be made. And so I'm like, this is probably going to do well, but honestly, like I don't want to use the travel app. And if the world never had a new travel app for the next 30 years, I don't think that I would notice. And so I am not the right investor for this business. And that's also what clarified, like, what am I the right investor for? Oh, it's for the stuff that I really want this to exist. And I really want selfishly to be a part of that journey. And if I'm right, and this does exist and everyone does care, like I'd love to be able to be rewarded for being right early.
Yeah. That's interesting.
I think one other thing that I'll add on the angel investing front, from the very first time when I got into it, it was not about investing in the sense of I'm investing for returns. I actually, to this day, I still have no idea if I'm actually any good at this. And at the time, I for sure had no idea if I would be any good at this or if I'd lose all the money that I invested, which, folks who were more experienced and wiser than me would often repeat that. And they still do on the internet. We're like, like you'll probably just lose all your money. And I've talked to people who have made a handful of angel investments and the outcome was they lost all their money. And my point of view with this was, that might happen and I will still feel like I won because I get to spend my time with my tribe and I get to, I get joy out of the process. I get joy out of talking to founders. I get joy out of investing in founders. And, every once in a while they'll call me and ask for something or another. And that's fun for me. And I really like it.
Yeah. You have this like intrinsic motivation where you mentioned like very early on in this discussion about how you're focused on giving back as part of your work. Like where did that intention come from? Where did that energy come from in your life, that desire?
I don't know. That's a good question. I don't think I've done the introspection to answer that one. What I can say confidently is when I finally picked my head up when we were building the e-commerce business, eComfort, when I finally picked my head up and I needed, help, and that help in that time was, we need to fundraise money. We need to figure this out. We need to shore up our balance sheet and raise venture money. What I found in the community around startups was this amazing openness and amazing giving mentality where all of a sudden within a year, I had established this super strong network of people who I felt they had nothing to gain immediately from me. And so they were still just willing to help me. They were willing to open up their networks to me. They were willing to give me advice. They were willing to share their experiences with me. And that left such an impression on me. And I contrast it with what I'd seen indirectly in some other industries where the default operating mentality was, what's in it for me? What's my cut? I'm not going to do anything until I work out my economics and my value. And I was kind of like how I just assumed everyone was until I set foot in this venture community where everyone was just the exact opposite of this. And they're like, how can I help? What can I do? Do you want to have a meeting with me? Sure. Let's have a meeting. I'm happy to share my thoughts. I'm happy to tell you who I think you should talk to. And this opened up hundreds of relationships in a very short amount of time. And I think that to me left this impression of like, wow, I want to be doing that. I want to be giving. I want to be helping people. Maybe it's selfish because it makes me feel good, but it was also, it felt so positive on the receiving end of it that I also wanted to give back.
Yeah, I get it. I feel like another place where I've experienced a similar thing is actually in something that we both do as well, which is this creative stuff, which is surprisingly open. Like people, like I just started the podcast, for example, like 3 or 4 months ago. People always say yes. They don't even ask me any questions about it. Like, oh, how many people are downloading it? Like, it's just not that kind of world. And I feel like startups and creative work are similar in the sense that if you're willing to put yourself out there in that way, like the universe kind of responds to you differently and people respond to you differently. And so those tribes tend to be very mutually supportive, and the competition and whatnot, like there's still competitive stuff happening, but it's not the same as you find in corporate America or something like that. Like, this is open. This is people trying to be successful, and you can find any advice, any connection that you need if you just pick up the phone. It's pretty incredible.
I think it's this frame of reference where it's not a fixed pie, and we can create stuff together. We can create value together by helping one another. And just because I give something doesn't mean I don't have it anymore.
Yep. Which is like a mindset for business, but it's just really a mindset for life. I mean, if you just take that in anything you're trying to do in life and you have that mentality, you're going to end up in a better place. Let's talk for a second about the newsletter, because the newsletter started at the same time as all this venture or this angel investing activity. So what's the origin story for PS You Should Know?
So I had always had this habit of reading a lot of stuff on the internet. And what I would do to share it was basically, if somebody's name popped into my head as I was reading an article, I said, hey, this person might like it. I would email it to them. And that was kind of an ad hoc thing that I would do. And I think what I saw most other folks doing from a sharing standpoint was they'd go on, at the time, I think it was, like one of the social networks, and they'd share it on the social network. And that was not my jam. Like I came through the internet and college world at a time where like I was probably one of the first folks who had access to like Facebook, and one of the first folks who had signed up on Twitter. And in both those cases, I just like, I engaged early and then I stopped. And so they weren't my place for me to share. And then I still had this burning need, basically, like, I want to tell people about the stuff that I'm reading. I'm really excited about it and I want to share it with the world. And so I had seen, like, I'd never even considered a newsletter. And somehow or another, I came to subscribe to a newsletter prior to its first issue coming out. And then, that weekend I get the first issue and I'm like, this is great. This is so cool. And because this person had done it, it now became approachable and accessible. And they did it on this platform that was itself a new tech startup. And so I started looking at it and I said, well, I could do this. This actually isn't that big of a deal. Like, I never thought about it before, but if they can do a first issue, I can do a first issue. And so I basically like created an account and I emailed 30 people who I'd sent articles to in the past. And I said, hey, I'm going to start doing this. If you're interested, sign up. And, maybe 20 of them signed up. And so the very first issue goes out, and it was early 2017. And I just like looked at the stuff that I'd read over the past week, picked out what I thought was the most entertaining or the most interesting, added my little, couple sentences of commentary to each one, and hit send. And the feedback was positive and people liked it. And, I'm a person who responds to rewards. And so like, oh, people like it. I like it. So I should do more of it. And little by little, every week, I just kept doing it. And, now I'm 300 and something weeks in. Never thought I would be doing it for this long. Never saw the future that far ahead. But I love it. And it's been so rewarding as a place. It's an outlet for my creativity. It's an outlet for the things that I want to share with the world. And it's a way to stay engaged with these same people who, again, they're my tribe. Like, they're the people who are interested, who are curious, who want to learn more, who see the positive things that are happening in the world and want to, be informed about them and have an opinion about how they all intersect. And also, like, not just a rose-colored glasses version of it, but sometimes, like, hey, what's wrong with this? What's wrong with that? And so it all fits together as this creative endeavor that reflects what I see out in the world to folks who are coming from a place with a shared curiosity and a shared interest on so many, like, it's a diverse set of topics that I cover. That's what it is.
Yeah, it's a super diverse and one that I love. I've been getting it now since we met maybe 4 years ago. And I look forward to getting it on Sunday morning. And what I find so impressive about it is, like, you really have an incredibly diverse intellectual curiosity, and you delve into things that I basically wouldn't go to if I didn't read your newsletter. So I find it as like this great, like, oh, there's this other world out there. Let me check out Pavel's newsletter. What's he thinking about? Like, for example, you do a lot of reading and research on health and tech and the developments in that space, which is I'm interested in, but I would never think to go read these papers and digest like what's happening. But what's your process? I'm curious, like, you must read an enormous amount of stuff. So when are you reading this, and how many hours a day are you reading just to get the information to produce the newsletter? I'm curious.
Yeah. I subscribe to a lot of places that send me stuff. So most of it comes through email. Somehow it lands in my inbox, which also is like some hacky stuff that I've like gotten to send stuff in my inbox. From there, I will save. So some of the stuff I'll read right there. From there, I'll save things that look interesting from like a headline or link standpoint. And then throughout the week, basically, I fill all of my time with something, which is not necessarily the most positive because I should probably just be more present in a lot of these cases. But like I have this habit of if I'm sitting here with 5 minutes, I don't have anything else to do, I'm going to probably pick up my phone. I'm going to read whatever the next thing on my list is that seems interesting. And so as I read stuff, I basically collect it and I save all the links. And then once a week, I'll go through and cherry pick what I think are the most interesting or most relevant ones that I want to talk about and collate those into a newsletter with my comments. And every once in a while, I'll also add like a little section at the top where I share a story of what I'm thinking about, of how I'm thinking about something. Very rarely it's current events. Mostly it's, something that's happened to me, a conversation that I've had that, has left me thinking about it longer than the conversation. And so, I just want to put it out there in the world.
Yeah. I like that section. I feel like that should be in every episode, every edition, and maybe even longer, because I think it's interesting to tie it all together, what you're thinking about, what you're reading. How many hours a day do you think you read?
I have no idea. I think, what can I say? My iPhone does the thing where it'll tell me how much screen time I have. I'm embarrassed to say what the number is because it's pretty high. Not all of that is reading, of course. A lot of that is emails and text messages, occasional social media. But I'd say over the course of a week, I probably spend well over a dozen hours reading stuff.
Yeah. That's where I'm at too. I have this thing where I can pay attention and read in the morning time. But if I try to read like right now, like let's say we finish this podcast and I try to go and read like the newsletters that have come in, because I'm like you, I like to get it all in my inbox. I can't focus anymore. There's like a limit to how much information I can put in my brain, but it probably adds up to like 2 hours a day or something. But I do it all at once, essentially, just one straight session in the morning.
Here's an interesting point. So one of my cousins, whenever I see him, we don't live in the same city anymore, but whenever I see him on a Saturday, he'll say, "What's in your newsletter tomorrow?" Like he's always looking for the inside scoop. And it's kind of fascinating that once I finish putting it together, I actually I have trouble remembering exactly what I put in it. It's kind of like, I check the done box on this piece of content. But what's interesting is on Sundays, I'll actually scroll through it as well. And now it creates this like network of all these things that I've been thinking about. And it ties back to the same concepts. Long ago, I actually also started having one of my virtual assistants take each item that I share, add tags to it, and put it up on a WordPress blog. And so I actually have, almost 7 years of content tagged in a database. And so I can search for a name, I can search for a company, I can search for a concept, and I can actually see a web of the things that I've been encountering, which is one of the things that I knew going into this I would love to have, is this like catalog of all the things that I've shared and how they might relate to each other, so that I can see the evolution of my thinking on a topic. I could see like, hey, how long have I been interested in this? How long have I been following that? Which is really fun. That's
very cool. Yeah. So it's like basically like a brain map, essentially, of what you've read. And now it's like 7-8 years in the making. Like that, there must be hundreds of articles and topics, right? I mean, it must be
thousands. Yeah, there's a lot.
Yeah, that's fascinating. Yeah, like I've gone through periods of life where I have like different note-taking systems. And like every 2 or 3 years, I'll like abandon one. And the problem is if you abandon one, then you like lose all that the brain map of that system. So I've been trying to stick with one. Recently, I've been sticking with one. I think I'm on like year 4. So we'll see.
Yeah, I've gone through so many variations. I used to take notes literally in a paper notebook, which I thought was really great. It was really effective. And then now I don't do that anymore. And all that stuff is lost. Like it's there, it's in a notebook somewhere, but I will never really open it up and capture it.
Totally. Well, listen, man, this has been a super fun conversation. There's a lot of your story that we didn't get into, so we'll have to do this again sometime. But I want to end it with this. Like, what's next for you? You've got such a diverse array of things going on in your life with the various investing activities and being a dad and being a creator. Like, what do you think the next few years looks like for you?
Yeah. When I left eComfort and left the acquirer, I spent a little bit of time, my wife would probably say more than a little bit of time, trying to figure out what it is I want to be when I grow up, what it is I want to do. And I settled on this concept where, what am I optimizing for? What is like the thing that I really care about? And it came down to two facets. One is I want to spend my time working alongside people who I like and respect. And two is I want to spend my time working on things that I find interesting for whatever reason that might be. And what's left off of that list purposefully is optimizing for economics, optimizing for like ego or, scale or any of that stuff. I think that if I just focus on those two things and that for the rest of my career, I achieve those two things and those two things alone, I will be incredibly proud and incredibly happy. And I will have spent the time in a really good way. And I think there's this concept of the two selves. Is the self in the moment, and there's the self the remembering self. So like you experience during the music festival and your experience of remembering the music festival, like is a concept. And I think this is kind of my hedge, that I will be really happy with both of those if I just spend my time working on things that I find interesting alongside people who I like and respect, which rules out solopreneur and rules out, a lot of other types of opportunities. And so what I know to be true, however I spend my time a year from now or 2 years from now, those are my two criteria. And so if one of those two criteria ever doesn't get met, then I have a problem to solve, and I will go and, reconfigure how I'm spending my time and what I'm working on to address that problem. And I'm in a luxuriously fortunate position, to not have this flexibility of, how am I going to pay the mortgage or the rent next month? And I'm taking as much advantage of that as I can.
Yeah, man, that's a great true north and a great way to end this. Well, Pavel, thanks for being here. And I'll make sure everyone knows where to find you in the newsletter. Actually, most of my followers already know about the newsletter because I wrote about it a couple weeks ago, but we'll remind them again. But thank you again for your time, and we'll do this again.
Thank you, Nick. It's been a pleasure.
Thank you for listening to the Nick Halaris Show. We hope you enjoyed the episode and would appreciate your help with spreading the word by sharing with your network on social. And until next time, remember, it's not about pursuing success to unlock fulfillment. It's about learning how to find fulfillment in the midst of success.